Well, welcome to our Fireside Chat with VantageScore President and CEO, Silvio Tavares. Thanks for joining us, Silvio.
Great to be with you, Faith.
I've been excited to have this discussion with you. There's so much we could talk about, and I realize very easy to get off track. So we'll do our best to stay on track today with you. So as I think about you and introducing you to the audience, I know many attendees probably know who you are, but I think you have such an interesting background that rather than me sharing it, can you just start off telling us a little bit from your perspective, what path led you to become the president and CEO of VantageScore so that the audience gets to know you?
Well, I think this was one of those things that was accidental and, on the other hand, quite purposeful. I love telling people that my nickname when I was in engineering school, in business school, and in law school, I had the same nickname in each one of those educational pursuits, and it was Data. And the reason why I had that nickname is anytime I'd get engaged in a conversation about intellectual things, I would just love to look at the data. So I think it's something that's always fascinated me. In much the same way that an artist thinks about a beautiful picture and the message that it sends. For me, I've always had a mind that loves the story that data tells, right? And so I started off my career as an engineer, electrical and computer engineer. That's my first degree. I got a job at AT&T Bell Laboratories when I graduated from college, and I thought I was going to invent something amazing and new, like a new semiconductor. And instead, I got stuck working on the AT&T Universal Card, which at the time was the second largest credit card issuer. But once I landed and started working on that, I started to see the data that was involved in financial data, specifically credit card transactions, and then overlaying that all the phone calls that were being done on this AT&T card, which was a calling card and credit card combined into one. And immediately I saw the power of data. And so it was a really circumstance, a really good circumstance. And it formed the whole arc of my career. I went on to run the data analytics business for First Data Fiserv, the nation's largest payments processor, and then was recruited from there to become the head of the Visa data analytics business. Not well known, but Visa has one of the largest non-payments businesses in selling data to banks and financial institutions for managing risk. And then one day I got a call from a headhunter that said, "We're looking for the new CEO of VantageScore." And I said, "Oh, okay, let me suggest to you a few folks who I think would be a great fit." And they're like, no, we want you to be the CEO of VantageScore. And I said, "Credit scoring data, how boring," until I learned about the mission of VantageScore, which is to use data to include more consumers in access to financial products. And I'm one of very few African-American executives in the industry. And I said, if I don't take this job, I'm going to regret it. And so I've been here for about a year. I love it because we're making a difference with our company, using data to be more predictive, but also give access to more credit-worthy borrowers that wouldn't otherwise have access to credit. That's our mission.
Yeah. Well, that's wonderful. And, it's interesting. You've had a wonderful, already trusted brand. I know everyone does know who VantageScore is. I know Barrett Burns did a very good job over the years helping that happen. But what I would say is, I think what's interesting about VantageScore is you are already very active in financial services. And I'd like to hear about what types of customers and consumer lending segments you already are involved with. Then how are you going to pivot over into mortgage, if that makes sense?
Yeah, it's a great question. And you're right. The company's been around for 15 years. One of the reasons it became successful early on was because it's an independently managed joint venture company of the three national rating agencies, or credit bureaus, as we like to call them: TransUnion, Experian, and Equifax. Those three companies established VantageScore. We've been independently managed. We have our own management team, general counsel, legal, marketing, et cetera. And we are growing very rapidly. We're growing at about 18% a year. That's probably 3 or 4x our largest competitor. We serve over 3,000 banks and fintechs,
Wow.
including 9 of the top 10 US banks. So not only are we growing more rapidly than any other credit score, we're also very well established. And we compete in every lending segment: credit cards, auto loans, personal loans, buy now, pay later. In every one of those segments, we're either number one or number two. The issue, however, is we do not compete in mortgage today.
Right.
And that is for a very odd reason. It's because the government, and specifically its regulators, have created an unintentional monopoly around our competitor, FICO. And that monopoly is longstanding. When we talk about conforming mortgages, one of the requirements for conformance and securitization is a credit score. And today, the regulations are written in a way that that credit score isn't any credit score, it's FICO. And so a law was passed approximately 5 years ago, the Credit Score Competition Act. It passed into law. It indicated to the FHFA that it should undertake a rulemaking to consider alternative credit scores. We went through an application process, and there were 2 stages to that. One, assessing whether VantageScore is a predictive score. All reports suggest that we passed that. The second stage was assessing what would the business impact be to the GSEs of implementing an additional score. And we've completed that process. So now all that remains is a decision by the FHFA to allow VantageScore to compete or not. We believe strongly that VantageScore should be allowed to compete in mortgage like it does in all the other segments. And it's our expectation that we will be allowed to compete in the mortgage space probably before the end of the year. And the impact of that is profound, because if you think about conforming mortgages, that's 80% of the mortgages in the US. Guess what proportion of those loans go to underserved groups, for example, African Americans? The surprising thing is only 4.8% of conforming mortgages go to African Americans in the United States, when African Americans represent approximately 13 to 15% of the population. And so that's an example of the damage that a monopoly can cause. And we expect that to be changed soon, and to allow alternative credit scores, including VantageScore, to compete in that space. So we're in for a really exciting development, which is going to be very beneficial overall and include many more credit-worthy borrowers into the mortgage system.
So, Sylvia, thank you for that. And it's helpful just to give a little bit of that background. And certainly I remember when pre-credit score or FICO, we didn't have any in it, and there was a lot of unevenness. And so if you think about the history, bringing in a credit score, in that case, it was FICO for mortgage, helped to start offer some evenness and less volatility into the market. But now looking back, it's like, how much more granular can we get and how much more can we bring into the system? And of course, competition is a cornerstone. But one question I had from you is, what is your expectation on how to bring in the newer credit scores and the downstream options? Will people look at a couple of scores? Because even your competitor has lots of new scores also to bring in people, as you do. And how do you see the market kind of absorbing and executing on that? There's some work to be done, it feels like.
Yeah, and I think it's important to keep in mind that the United States has the most vibrant and largest credit industry in the world. Like,
Yeah.
bar none. There's no one even close, right? And part of the reason it's so vibrant is because of the service providers like TransUnion, like Experian, like Equifax. They provide transparency to
Right.
to the lenders in order to understand how to evaluate the creditworthiness of a consumer. So it's really important to keep that in mind, because we don't want to break something that works very
Right.
well, right? We also want to keep in mind that the very purpose of Fannie Mae and Freddie Mac, the whole reason they exist, was because the federal government wanted to promote home ownership for the broadest possible cross-section of American society.
Yep.
And the reality is that the GSEs have been successful in some segments and have failed miserably in others, and particularly in the area of underserved populations, and specifically African Americans, Hispanics, and Asians. There's a lot that has been left undone. That mission is not fully accomplished in a market. And by the way, that's damaging not just to those segments, but it's also damaging to the banks that want to lend to those segments. I'm sitting here in California. You might be able to see the beautiful sunshine outside of my conference room here. Here in California, 58% of the population is African American, Asian American, or Latino. So if you're not lending and providing mortgages to those segments, not only is it not feel right, it's not consistent with our American values, but also it's a bad business proposition, right? And so we've got to upgrade the system. There is some cost to that. There's no question about it. Implementing a new credit score is time consuming. But what other choice do we have?
Sure. We have to find a path forward.
Yes, we have to. Yeah.
Well, there have been so many substantial policy shifts, and I think we're resetting once again. You hear a lot about trended credit. You hear a lot about rental income. You hear a lot about shifting away from medical debt and not hitting scores. And how does that impact the Vantage score and the trends you're seeing? Would you have any adaptation to some of the moving trends going on in the market with student loan relief, pay later, buy now and pay later? I mean, I'm curious about what your observations are on that.
Yeah, innovation is the lifeblood of what we do. I mean, I've been a data scientist, a fintech guy for most of my career. And what you really learn in that industry is that you have to keep innovating. And that's one of the reasons why competition is so important. Unfortunately, some of the companies in the industry haven't innovated. We've always been an innovator. We were the first, for example, to include alternative data like rental data in our models. We were the first to look at medical debt and realize actually people who have paid medical debt collection accounts on their credit report, they're not any less creditworthy. They pay their bills at the same rate as those that don't have it. And so we were the first to exclude paid medical debt collections. In August, we were the first to exclude all medical debt collections, because what we realized is during the pandemic, the reporting practices of medical debt changed significantly. And when we looked at the data, it was very clear that people who had medical debt collection accounts paid back their credit card loans, auto loans, all their loans at the same rate as those that didn't. And so it wasn't predictive. And so we stripped that out. We were also, as you pointed out, the first to have trended credit data. So not just looking at your score at a point in time, but looking at the trend. And so we've been a continuous innovator. We have some really exciting new developments coming soon. Like one of the key things that everyone's talking about is alternative data, and specifically consumer permissioned bank data, and including that so you get a better picture of the consumer's cash flow. We're going to be launching a new product called VantageScore 4 Plus, and that's going to be making a big difference in enabling lenders to assess the real-time creditworthiness of a consumer, looking at their bank account data when the consumer gives permission. By the way, you may know that right now there's a bill making its way through Capitol Hill that would potentially mandate mortgage providers to look at that alternative data as part of their underwriting decisions. I don't know if it's going to pass into law. To give you a sense of how rapidly the innovation is coming to the market. And we have been the leader, and we're going to continue to be the leader in this space going forward.
I love it. I love the energy and the focus. And I mean, you've always had a high quality focus on the markets and inclusion. And so it's great to hear from you kind of where you're going. So switching gears a little bit, we have a bunch of millennials seeking home ownership, aging baby boomers wanting to transition into new home ownership that's different than what they're living in, perhaps. And it seems to me you have a perfect storm. You've got the administration pushing hard on inclusion, first-time home buyers, looking at new and innovative ways, special purpose credit programs. It goes on and on. Can you tell us a little bit about your Inclusion 360 platform and kind of share what that is and what led to you to roll that out?
Yeah, and I think a lot. I definitely want to talk about Inclusion 360 because it's a new industry leading tool that we've published that enables any bank, any policy lender to just go to our website and understand down to the geographic level how many more people they could serve that are
Yeah.
credit worthy by demographic group in their regions. Because the biggest problem a lot of times when you speak to banks and you ask them, do you want to be financial inclusive? Every bank CEO that I speak to, they say yes.
Yeah.
The question is how, right? And so
Right.
we need data. And so we've developed a data map, and it is very much that. It's a heat map, and you can go in and look at Inclusion 360. Just Google it. It'll come right up, VantageScore Inclusion 360. And for every part of the United States, you're going to be able to identify where are the pockets of the underserved where you can go to that market. But
Mhm.
for us, this is just a piece of the puzzle, because if you
Right.
ask us every day what we focus on the most at VantageScore, it's actually not inclusion. Inclusion is very important to us, but the most important thing that we focus on is predictive power. One of the best things, one of the things I enjoy the most when I go see a big bank CEO, I was actually just at one earlier this week, and I asked them, what do you think of VantageScore and its predictive power? Every CEO I've ever met says, your models are more predictive. And in an age where there's a lot of volatility in the market, right? There's
Yeah.
there's unemployment rate is changing, inflation is changing, delinquencies are rising. There's a lot of volatility. You have to be focused on that predictive power, and that's what we focus on every day. We actually just launched another tool last week, which is called VantageScore Risk Ratio. And it's an industry first. For the first time, you can just go to our website and you can actually see for any range of Vantage scores, you can actually see the delinquency rate, 30, 60, 90 days, by product, auto, mortgage, personal loan. And you can see how that relationship between the credit score and the delinquency rate has changed over macroeconomic conditions over time. So for any chief risk officer, they don't have to guess as to what that change is going to be over time. They can actually look at it historically, and they can do it by product line. So we are so committed to that transparency and predictive power. We're willing to make that data available right on our website to anybody who wants to see it. And I hope some of your viewers and listeners are going to do that right after this call.
Well, Sylvia, you've got, a lot of industry players on this call. You've got a lot of government players on this call, agencies, and Capitol Hill. You have a lot of civil rights folks on this call. So there's a lot of, not this call, but, attending this panel. And, so I think they will go to your website to do that. And what is that second product you just rolled out called again?
It's called VantageScore Risk Ratio.
Okay, well, I'll be checking it out.
Yeah, and Inclusion 360 is the inclusion map, and stay tuned. We're going to be launching a lot more tools there. We really aim to keep our leadership position as the most transparent and most predictive credit scoring model.
Well, I think one thing I'm pretty sure the CFPB and others are looking hard at, FHFA and others, at transparency of models, what's driving decisions, what's driving denials, having really traceable model building and outcomes, so that if underwriters are saying they're denied, you can't just say it's in a black box. So I think the more transparent everyone is in these processes, the better it's going to be for the borrower, the investors, certainly the regulators like to see that as well.
Yeah. And I think, the reality is that credit scoring is a really important part of the solution and the way forward to drive greater inclusion. But there's also a piece that is internal to banks and lenders. I was speaking to one of the big bank CEOs recently, one of the top 10 banks, and they were telling me that based on their estimation, only 1% of loan officers in the country are people of color. Only 1% of loan officers are people.
Really? Oh my gosh, that's terrible.
It was shocking to me. And, I'll tell you on a personal basis, I'm an immigrant. My family immigrated to the United States when I was 10 years old from Angola, which is West Africa. I'm Portuguese speaking, which is why I have this very Portuguese sounding name. And, our experience, like most immigrants, is we came to America with the hope of living the American dream. My late father was a former politician. He is now a professor at a university in Cambridge. We moved. He went, like most immigrants, to the bank to get a loan for a mortgage, right? Because they had found a perfect house where they thought they could raise their family. And he applied and he was denied. And my father, who was an economist, a very learned man, he said, "Why? Why did you deny me? I have got a great job. I've got enough money in the bank for a down payment." And they said, "No, because you don't have a credit score." And so I remember one of my earliest childhood memories was him sitting down at the dinner table with my mom and explaining how they were going to have to use their entire life savings to buy a home in cash. And my mom thought that was crazy, right? Because what if one of us gets sick? She's like, the whole family will be ruined. But he said, no, we're going to do this and we're going to be able to refinance it in a few years and unlock some of that capital. And so 2 or 3 years later, after he got denied, he went back to the bank and he was able to get that loan. And that loan is what paid for my engineering school. It paid for my MBA. It paid for my law degree. That's what enabled us to make our American dream come true. And that is why loan offers are so important. It will be a surprise to you to know that the second time when my dad went back to that bank, Cambridge Savings Bank, the loan officer happened to be a person who had also emigrated from Angola, if you can imagine.
Wow. That's great. That's a great story.
Right? That's why those loan officers make a difference. Yes, the data is important. Yes, the credit score is important, but people are also really important.
They sure are. And I'm with you on that. I've spent a lot of my career helping people get back on track through the back end of my career through some loss mitigation and financial foreclosure mitigation efforts, so that we could keep people in their homes. So I'm very with you. The resiliency of staying in homes is equally important. Well, so your story is really personal and it's professional, and that's led you here. And you aren't really from the housing market per se, but feels like you have a big passion to get into mortgage big time and really keep leading the way. And we appreciate that about you. What are your thoughts for our current state as we lean into 2023? I've been around a long time. These are tricky markets. I just read today, we're up, to close to 6.5% in rates, and from a little under 3, and about 18 million people no longer can afford a $400,000 home. I think that was just a recent report I read this morning. So, we're feeling a little bit like our options are getting more limited. So we have to kind of step back and make sure we're investing for the future for when things loosen up a little bit and we can bring more people in, and of course, keep people in homes as well. And just curious what your thoughts are for next year and what your goals are for VantageScore.
Well, so I mean, the very, very simple two things we're focused on are continued innovation and continued scale. So we will continue to invest in developing industry-leading technologies and products that will enable banks to lend more and to do it safely and soundly. That's our number one mission. The second thing is we're going to continue to grow in the number of banks and fintechs that use us. We have a really significant pipeline of new products. And, you pointed out I'm not a mortgage specialist, but, I've spent my career, dedicated my entire career to fintech. I have dozens of patents in this space, and it's all about innovation. And quite frankly, people that come from outside this space have a huge advantage in innovation.
Yeah, I would agree with that.
Right, because they don't look at the problems in the same way as always. And so we're going to be continuing to do that. But I agree with you. There's an unprecedented level of volatility. We already see the data showing that mortgage originations have dropped dramatically just in the last 3 months. That's going to probably continue as the Fed continues to increase interest rates. Affordability will become a greater issue. And, the reality is there are people that do want to sell their homes, but then they think about, I'm going to get another mortgage at maybe the interest rate will double, right? From 3 to maybe 6%. And I'm not going to be able to afford it. And so that's obviously putting a damper on that activity. However, there is still a very significant opportunity for people that have not owned a home before. That's really important. We have developed new tools, and you're going to actually see one coming out in about a month that enables the nation's leading lenders to understand the pulse of the credit marketplace, to understand whether credit card lending is increasing, whether mortgage is decreasing, all of the key things that you want to look at as your dashboard for how the credit market is evolving. You're going to be able to get right from VantageScore, because we have a very unprecedented position. We have the ability to see the activity across the 3 national credit reporting agencies. We've also invested in enriching that with additional data sets, and we're making that available to the chief risk officers and policymakers on a real-time basis, so they have almost perfect transparency into what's happening in the credit markets. So stay tuned for that. It's going to be coming from VantageScore.com. There's a lot of volatility, Faith. I agree with you. And the way that you navigate through that volatility is by having good data and insights. And we're very much stepping up to provide that to the marketplace.
No, you sure are. And I really appreciate that your models are free and encouraged to look in and get some insights to what you're seeing and sharing with the industry. And that's going to be really helpful to many. So I, for one, am very appreciative. I'm appreciative of VantageScore. And Silvio, so nice to have you here at this interview. And I hope we can do it again.
Thank you, Faith. It's been a real pleasure to be on with you. I appreciate the great questions and just the insight, the deep experience that you bring to every conversation. I know everybody that's participating in the Housing Finance Strategies conferences, they so appreciate that about you, and I have as well. I've learned a lot just talking with you today. Thank you, Faith.
Thanks so much, Silvio, and on to our next panel. So have a great afternoon.
Thank you, Faith. You too.